There was actually a speech out of the New York Fed on the 29th of September where they spoke through all the things we talked about last week about the RRP and the interest on bank
Yeah,
reserves.
I think they watched the show.
Yeah. But kind of talking about that once we move from a position of abundant reserves to ample, then that's when QT ends. And then the natural kind of end to QT follows actually balance sheet expansion, because just the balance sheet will naturally expand, but with currency expansion and stuff and growth essentially. But last week we had bank reserves fell sub 3 trillion, and that basically takes bank reserves as a proportion of bank assets below this 13% line, which the New York Fed have said like that's kind of the line for like ample. So that was kind of okay, that they're going to be ending QT now. You've seen a lot of the big banks now jump on that idea that right this week that they end QT. So I think that's happening. I think it'll have to happen. That's a big catalyst for this market. That's a big, because we've had like global liquidity has been rising, right? And we talk about like China are pumping a lot into this market, and we're seeing this global rate cutting cycle. There's a lot of liquidity coming in. Obviously, we're running this fiscal dominant story. But from a US liquidity point of view, you've still kind of had a bit of tightening where, we had the TGA rebuilding. You've had say the fact that we've hit like basically zero on the RRP, which was kind of offsetting those things, and then quantitative tightening in the background, just constantly kind of chipping away. So the liquidity impulse, if you like, from the US has not been that strong, and particularly with the RRP tapping out. Now with the end of QT, which I fully expect to happen, and I'll look stupid if this comes out and they haven't done that, and I think there'll be a problem, by the way, if they don't. But with the ending of QT, then the liquidity impulse out of the US starts to pick up,